There's a lot of fear in the market right now, and rightfully so, right? We have ARK that's down over 7% on the day alone. In the past year, it's down over 54%. We have super popular game stocks like Unity down 8% today, and on the year down over 35. Another super popular C Limited is down 12% on the day, and it's down over 40% in the past year. But I do believe all this fear does create a lot of, I want to say, panic selling in the market. So I want to do something different today, right? Today I want to share some awesome tweets that kind of show the long-term mentality and kind of use my platform, my kind of videos to help out maybe some investors that are very fearful at the moment. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So today I want to use my platform for the opposite, right? I don't want to induce fear in the market. I want to show kind of this long-term mentality and why I believe some of these social platforms are pretty cool to have if you are an investor. So I actually have 10 tweets today that I believe show great mindset in the market today. All of them are from different investors, and one thing I do want to say is all these investors have different styles. Some are growth, some are dividend, some are index investors, some are old school, some are new school. But I follow different styles of investors so I can get the different types of mindsets from everybody to help me shape the investor that I am today. So the first tweet I'm going to take a quick look at is by Bahama Ben 9. Ask yourself, 3 years from now, will I be happy I bought or sold into the fear? Obviously, looking at 3 years in the future, no one knows, but probability that the market will be a lot higher than it is today. So obviously 3 years from now, we should hate that we sold into this fear today opposed to be buying into this fear. This doesn't mean, hey, go out there and kind of go use full margins on an account and buy the dip. No, be kind of respectful with your buying opportunity still, because the dip can continue to dip. This is one of my favorites actually by Fired Up Wealth. If stocks stay lower for a period of time, it's a gift. The problem, the people who do not have the financial education get scared and do not buy until the next FOMO euphoric run. But wealth is built during bear markets, buying conviction stocks for the long term. This is probably one of my favorite quotes for the day. It's very true. Many people, when they invest in the market, what do they want? They want that quick return. Right now, it doesn't seem like anybody will get those quick returns the way the stock market is moving. So many people are not going to buy during this phase of great accumulation time, in my opinion. That's why I believe dollar cost average is very great for times like this, where you just buy on a weekly basis. Right now, while the market is down, I'm trying to increase my income so I can buy even higher than I normally could, right? So my dollar cost average, even though it's weekly, I'm trying to increase that weekly addition because I do believe right now is a great time to buy over the long term of things. Another great thing is buying conviction stocks for the long term, buying companies that we believe in and companies that have strong revenue potential, are in a strong market, have strong positive cash flow from operations. So thank you, Fire Up Wealth, for that one. Then we have Investing Lion. This is brutal, no doubt, but taking ill-advised decision based on fear right now is something you will regret in a couple of years. And let me just say, fear can go both ways. Sometimes people might fear buying too little on the dip, so they might go heavy on margins. That's not what you should do either, right? You should find the perfect balance because, like I mentioned, fear goes both ways. Fear can have you right now selling your portfolio, or fear can also have you using ridiculous amount of money on margins at the moment and can cause a bigger hits to your portfolio. So fear works both ways and is something that should not be used when making decisions. The fear of missing out on big gains can easily be as ill-advised as the fear of selling because stocks can go lower. Next, we have Lou Whitman. I fundamentally misunderstood this company and my premise was incorrect. That is a great reason to sell a company, right? Just because the stock price goes down doesn't mean you have to keep buying it over and over in dollar cost average, right? If you misunderstood the company, if the company is no longer what you thought it was, that might be a great reason to sell. Oh crap, the stock is down. That is definitely not a reason to sell at the moment. If the stock is the same as you originally thought, if it fundamentally is as strong, if the market is still as strong as you believe, then just because the stock price is down, that should not be a reason to sell. Next, we have Dividend Hero. Nobody ever got rich by panic selling. And this is very true, right? Panic selling is, in theory, one of the worst things to do. Again, sometimes the emotions take the best of us. If emotions take the best of us, it means that we're probably too overly leveraged, overly invested at the moment. And we should kind of use this moment to kind of understand what our magic number is. How much are we really willing to invest? How much are we really willing to kind of have on hold in our portfolio for the next few years? So kind of emotions, again, is a very important metric to understand. Next, we have Dr. Parikh Patel. This is more of like a comedy investment account, but I do believe this tweet is pretty cool. The secret to investing is forgetting the password to your brokerage account. And very true, most of the times, the best thing to do during scary times is do nothing. So again, even though this is pretty much more of like a comedy account, that is some great knowledge there. Next, we have Jack the Butcher. And this is a pretty cool image. It just shows the volatility during the days can look very sketchy. But when we take a look in decades, especially investing in index, investing in strong ETFs, it doesn't necessarily always work in single stocks. And that's what we have to remember. We invest in stocks that we believe can do well. This is definitely something that can happen, but it's not always guaranteed. Kind of like how the index, not guaranteed either, but historically has always been like that. But days tend to be very, very noisy. In the long term, it just looks like a straight line. Again, this is more of a varied basis. This is mainly for index investing, but investing in strong companies can result with similar results. Then we have Michael Lisso. Recessions have historically produced some of the most valuable companies we know: Uber, Airbnb, Microsoft, MailChimp, and many more. If this downturn continues, it's going to mean a lot of opportunity. Keep your eyes peeled. And that's I want to say, the biggest risk, in my opinion, about single stock investing. We might pick a stock and it might not be the one that will continue to do well, but if we do find one that will do well in the upcoming decades, it can produce some amazing returns. Then we have Jammin Paul, and this is kind of more, I know we're doing positive, but sometimes we have to come back to earth. High growth stocks software multiples are back to where we were in fall of 2019. We can see in 2019 that was the previous high. The high growth bucket medium multiple is still 25% higher than it was pre-COVID, February of 2020. So right now we can see high growth medium stocks are about 17.9 based on next 12 months revenue multiples. These are values last seen in the peak of 2019, but it's still lower than pre-COVID. So pretty much what Jammin Paul is saying, that, hey, to some extent, markets can continue to drop. And that's an important thing to understand, right? Markets, they can look bad, but they can still be bad for much more. That's why whenever investing, you have to always remember the possibility. Obviously, stock prices can go up, but there's always the possibility that stock prices can go down. And for the bottom one, we have Greg Duncan here saying we're at the bottom or going to have a rip your face off rally just incites emotion and makes people feel like you have a sense of what's going on. Speaking in absolutes just means you're a Sith, and we are not Sith here. Speaking in absolutes about a market where there are no absolutes is silly. No one knows what's next, and that's very true. Obviously, technical analysis might have a probability of being right, but no one is ever going to be 100% right. And again, just having emotions of missing out on the bottom or missing out on the top can create a lot of emotions in a portfolio that can do really, really bad. So I hope you guys enjoyed this quick video. I just wanted to show some positivity in the market while things are still pretty fearful. So take care, have a good day, and see you next time.